Hello traders, this is Rich Derrick from Tradesight. There's a look at the market preview for the coming session. This is going to be for Thursday, April 3rd, 2014. We had a modest update across the board. Today was the first day in three that we did not gap to the upside in the broad market futures. We made a little bit of positive progress with the market internals, but they really weren't all that great. Here's a look at the ES futures. You can see there's no gap today. We did get a little distance above that 8-ace level at 1875, but we have to really clear the previous highs before we get too excited. We did make a new high close on the move, which is notable. So if we do power to the upside tomorrow, we're going to find some resistance at the plus 1-ace level, about 1890 or so. Note that we're 12 bars up in the seeker exhaustion count, and could qualify for a 13 exhaustion warning as early as tomorrow. Moving on to the Nasdaq side of the market. Nasdaq side of the market was higher on the day, but again closed below the day's open, which is never a positive. We're not anywhere near the previous high here, so this is really more of a bounce. Today was kind of a little bit of just a resting day after the big range expansion from the previous candle. If we do head higher, we're going to have a little resistance at the 7-ace level at 36.72, and then above that, the next resistance is going to come in at about 37.10. If the Nasdaq does turn down again tomorrow, keep in mind that this area could be the B wave bounce. Here's your A wave to the downside, the B wave bounce, and then the C wave. We have to undercut the lows of the A wave. But before we do that, we have to take out the near-term support, which is going to be in the area of the 50 DMA, where that coincides with the 10 EMA at about 36.18. The bonds continue lower on the day. The TLTs, the popular ETF, closed below the 50 DMA for the first time in a number of months, and that's a notable development. So 13 exhaustion is still in place. We use the risk level here and start to roll to the downside. So if we do continue to the downside, expect this 4-ace level at 106.25 to come into play. And it's also pretty much a double level because we've got the 200 period moving average just below that. So if we do continue to the downside, which is very possible, keep that in mind. That's going to be a very strong level. We had a very low reading in the trend today. We closed at 0.61. So that's going to be in the average for about 2 weeks now, obviously. So the 10-day trend here now is starting to roll to the downside. We're at 0.99. We're not at that climactically overbought area of 0.85 or greater, but we could get there pretty quickly now that we've got a couple of low readings in this 10-day trend. The advanced declines were positive on both sides today. The cumulative advanced decline line on the New York Stock Exchange side definitely positive. Nasdaq side is still suffering from this confirmed lower low and is still below the previous high water mark. So the breadth of the Nasdaq side is not that good, while on the New York side it still seems to be pretty positive. Here's a look at the multi-sector daily chart. A little bit of a bounce in the XAU, and the BTK was still fairly positive today. The semiconductors, which is the blue line, in the banking index really didn't do too much today, so they were both resting today. And here's a look at the sectors ranked from best to worst. The XAU is the top gun on the day. The airlines are still pushing up higher here. Pretty strong day. We are 13 bars up in the secret exhaustion run, so keep that in mind going forward. The bottom of the barrel today was the utilities. They were weak also yesterday. Semiconductors underperformed the market for sure. The BKX didn't do too much. The BTK was a fairly decent performance today, but the oil services and the transports were both fairly strong, which is a good showing for the broad market side. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.